What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 17th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And on today's video, we're going to be spending some time to talk about something that's very fundamental to the macro or long-term view of this emerging market of cryptocurrencies, and more specifically, Bitcoin. And arguing the fact that Bitcoin is not only going to be growing as a store of value over time, but also that there's a wide range of indicators that we can use to understand Bitcoin growing as a store of value. Now, I think we can all agree in the short term that Bitcoin is probably not the best store of value at the moment. It's very volatile and speculative at the moment, and is a very early on developed financial product. So we're going to be talking about the indicators that we can watch and getting a better understanding as to how we can see Bitcoin growing as a store of value over time. All right, so I've rambled on enough. Let's go ahead and dive into the first indicator here. So we're taking a look here at the Bitcoin chart, and we can see this is probably one of the oldest historic examples of price action that we have for Bitcoin trading on Bitstamp. If we were to go back to Mt. Gox, it goes a little bit back further. However, this is one of the best ones we have at our disposal. Now, the first indicator that I want to talk about here that I recommend people definitely use when taking a macro perspective or trying to understand Bitcoin as a store of value is HV, or historical volatility. Now, this is a very simple indicator here that we're going to be taking a look at on the chart, but I want to go ahead and dive in to a little bit of an understanding here as to what historical volatility really is. Now, generally speaking, when we're measuring volatility in any given market, we could do this for stocks, we could do it for commodities, whatever it may be. We can do it for cryptocurrencies as well. It's generally a measurement of calculating the average deviation from the average price of a given financial instrument. Now, in the case of historic volatility, in this case, we're actually doing something that's quite simple to understand, and we'll take a look at the chart to really kind of make a practical understanding of this. And that is basically how far away we are from a central average or moving average from the current given price. So to give you a better understanding of that, let's go ahead and take a look at the chart here. So I want to take a look at a shorter time frame here. If we take a look from September here, for example, where Bitcoin was trading around 6,000 to 6,200, and all the way over to November, as we can see, again, really the same price range here. You can see the price didn't really change that much here for Bitcoin. We really held the same price range here. But if we take a look at historic volatility, we actually saw in that same given period of time, historic volatility drop from a 75-point range down to 36, okay? This is a more than half reduction here in historic volatility, yet price didn't make any substantial movement. What does this tell us about historic volatility, or volatility in general? Volatility is a fluctuation of price. If price is moving more rapidly up or down, it doesn't matter what direction. If the range of price is expanding within a given period of time, volatility will increase, and vice versa. If price is going stagnant or it is in a predictable fashion with the average, we're going to be seeing a lowering of volatility. So it would be that in the longer term here for Bitcoin, just like any other financial instrument, such as gold or other stores of value in the world, we want to see volatility reducing in the grand scheme of things. So we're taking a look at the weekly time frame indicated up here in the top left corner of the chart. And we can see here that historically speaking, Bitcoin has actually been seeing lowering highs in volatility. Now, Bitcoin is still a volatile asset. There's no doubt about it. But we can see here that the volatility peaks were much higher back here during the first previous bull run from 2011 to 2014. We can see here, for example, from ranges of around 180 to over 220 points here at the peak. But if we take a look at the previous bull run and as well as the previous sell-off, we started to see highs at much lower levels, at 120, the peak here being around 155, and down here as well around 100. So again, we can start to see that Bitcoin, even though it's still a volatile asset, is setting much lower levels here. And it's going to probably continue to set that, even if we have continued uptrends that set new highs and also even sharper corrections in regards to a dollar-weighted value in this case. So again, it's over time seeing how we can see lower ranges of price fluctuation and a much more predictable pattern for Bitcoin when it's going up and going down in the short term. So anyways, that's the first index that I want to take a look at. And again, guys, you can actually use different variable factors here. I'm using a length here of a 10-week average. You can expand this to different areas. This is basically what HV runs off of. But even if you were to enter in different values, again, we still see the same trend here. We're seeing lowering levels over time. It's just running off of a different average. So I recommend sticking at 10 personally. This is what most people will use, but you might get different opinions across the board. All right, so let's go ahead and take a look at the second thing we want to talk about, and that is rate of return. So I'm going to go ahead and turn on some drawings here, and I don't mean to overwhelm anyone with this. We're switching our chart here to a logarithmic chart to make it easier to see the rate of change for this given asset, which is Bitcoin, and we're also going to be taking a look at the cycles of Bitcoin. I'm also going to take off the auto function here that allows us to move around the chart much more simply. So let's go ahead and talk about what rate of return is. So rate of return is a profit on an investment over a period of time expressed as a proportion of the original investment. So to keep this from getting too overcomplicated, as we talk about growth over time, a good way to view this is that, for example, if I were to invest in Bitcoin at $1 and it was to go to $2, that's a rate of return of 100%. I've doubled my money in that case. Whereas in the future, where Bitcoin has grown as an asset, if I'm buying Bitcoin at $100, I'm going to need it to go to $200 to get the same rate of return on my investment to double my money. Same goes for 1,000 to 2,000, 10,000 to 20,000, 100,000 to 200,000. You get the point. Over time, you have to have much more substantial dollar moves to see a rate of return for Bitcoin. Now, the good thing here in regards to Bitcoin as a growing store of value is that we don't have to keep making the same kind of leaps we see in Bitcoin. Now, that could be seen as a negative in this case, but because I think we all want Bitcoin to go to the moon, technically speaking, or I guess, speaking in crypto lingo in that case. But over time, we should expect Bitcoin to not only see decaying levels of return, but also decaying bear markets in this case. We want to see lowering decay in price over time as we're making lowering returns. So what do I mean by that? Well, I've got a highlight here of most major bull markets and bear markets that we've seen. We really had two of each so far for Bitcoin's short-lived price history. But we can see that they play out relatively similar, somewhere between the upper 700 range worth of days and candles and over 800 in the previous run-up. We can also see as well that we usually have somewhere around an 80% retracement for Bitcoin, some more short-lived, some more extended. Now, the major point here, as we take a look here as well, is that as the logarithmic chart continues to expand over time, that the line is going to start to flatten here, that we're not going to start to see these huge leaps here. And we can see that registered in the percentages that we have here, the percentage returns. A 51,000% return here from the low of Bitcoin at $2 all the way up to around 1,000, right? And we can also see here as well that decaying return shows. In fact, I would say that the best estimate to understand here is that as Bitcoin continues to go through the next cycle and the next cycle, that we're going to see, roughly speaking, around a 1/5 return to what we saw last time, meaning that as we saw 50,000% return here, roughly speaking, we saw about a 10,000% return here, again around 9,400. So we're going to be decaying about 1/5 of what we saw previously. Now, if we were to play out something relatively similar here and play along the line of resistance that we can see over time, we could expect that within the same general time range, if we take the middle between 770 and 840, that a relatively predictable pattern would see that Bitcoin would top out at around the upper $60,000 range, around 68,000. In about 805 days, with a return of 2,300%. This would be relatively in line with our ballpark. You could get different estimates for this, guys, and have different predictable reasoning as to why you believe price would be reaching at a different range, hitting resistance at a different price, or be topping at a different time frame. Everyone can have different predictable outcomes for this. But the fact of the matter is that in most cases, we're going to be expecting that these bull markets are going to not only be getting in a longer time frame than they previously were in the past, but also that bear markets are going to extend as well. So you might want to expand your chart here further for the green box, as well as the red box here that would indicate a longer drawn out bear market. Another thing as well, as I mentioned, I just want to emphasize it, as we have decaying returns here to the upside, we're going to have decaying downside action as well. So whereas we've seen about an 80% reduction both times here for the market, it's going to most likely be that these bear markets drag out longer and only see about a 60 to 70% reduction. And then in the future, something more around 40 to 50%, which is what we see in much more mature markets. And hopefully, inevitably, much, much lower levels of decay here and a downward price action and upward price action if Bitcoin is to become that store of value. Again, coiling in the price over time. The logarithmic valuation fluctuation, that was a big set of buzzwords, would basically thin out over time. These levels are supposed to get closer to one another. So hopefully that explains it quite well, guys. Now, the third thing that we're going to be talking about in this video, outside of what we discussed in regards to rate of change and historic volatility, is adoption. Now, the reason why I use the internet as a great gauge as to where we are is to really put some perspective as to A, how much room we have to grow in this space as an emerging currency class, but also to understand how we can start to use user adoption in this case, and how can we really go about measuring that. So let's go ahead and get some perspective as to where we are in regards to comparative to the internet, in this case for crypto adoption. Well, right now in the global world of crypto, it's very difficult to measure actual adoption. Unlike the internet, where we can have a direct measurement in most cases of how many users are on the internet, it's very difficult to get that gauge on cryptocurrencies, and more specifically Bitcoin. But the estimate is somewhere, if you look at a variety of statistics, somewhere around, I would say that the numbers from what I last checked were around 50 to 70 million users. Now, if we were taking the world population back here on the internet here, this would be similar to where the internet was in 1997, but we have a much larger world population now. This is actually something that's very close to around 1995 to 1996 levels, around 0.4 to 0.9% of global adoption. We are actually less than 1% global adoption of cryptocurrencies. Now, you could even be more flexible to this, or actually more stingent. For example, to be more kind of critical and stingent, some might say that actual adoption is when you're using cryptocurrencies. The number that I'm going off of is simply just having an investment or stake in ownership of cryptocurrencies. If we were to actually gauge real adoption as using a cryptocurrency in day-to-day life, I would assume you'd get something as a fraction of a percentage, right? It's not something that's used across the globe every single day. It's not that mainstream, but it is used in commerce in some ways. And again, we could be more laxed about it as well. Maybe we consider adoption of some sort as knowing about cryptocurrencies, or maybe people who own crypto in exchanges. Again, there's different ways you can gauge this. But roughly speaking, we want to see as we go through these market cycles that as we see a higher level of price, that we not only have higher transaction volume, but that we have a higher rate of ownership or ties to cryptocurrency in some way. We can see, for example, during the dot-com era, where we saw about a 5 times expansion in a set of a few years for the internet here, up to 5% in March of 2000, which again was around the peak of the dot-com bubble. So this is what we want to see for crypto. We want to see these kind of leaps forward in regards to not only valuation, but also adoption of the technology. And as we can see over time, the internet has had substantial growth, but it does take time. This is my biggest emphasis here, guys, when it comes to cryptocurrencies. It is a market that, just like others, is going to take time to expand. It can move faster maybe than the internet if the financial incentives are there and the fact that we have the internet now, so information can spread much quicker. But this is going to take a long-term process to truly find Bitcoin's valuation and to see Bitcoin growing as a fully functional store of value. So anyways, that's it for the video, everyone. Thank you all so much for tuning in. I hope you all enjoyed this video. I hope you all enjoyed the perspective that I provided. And if you guys liked the video, please leave a thumb up down below in the comments. And if you guys have another measurement as well that you use to determine Bitcoin as a store of value, leave it down in the comments. We can only learn if we share each other's information and learn from one another. So anyways, that's it for the video, everyone. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.